All right, Gautam Shah is founder and chief strategist at Goldilocks Premium Research. He's joining us right now to tell us technically how our market's poised. I mean, uh, any which way you look at this, Gautam, you got to say this is an extremely strong market. I mean, we're a couple of percentage points away from all-time highs. Are we getting there soon? What's your view overall, Gautam?
Good morning, Prashant. Well, the markets in the last 3 weeks has really behaved like that cricket player who's standing at 99 and is just having butterflies in his stomach, not able to take that run to get past 100. I think that's what Nifty has done, close to 18,000. There have been a few attempts to get past this number, but every time we get there, there is a bit of a pause and the market just does not have the strength. However, I think now with the global setup quite strong with the kind of rebound that we've seen late last week, it does seem that very, very soon we will get past that number of 18,000. And once that gets confirmed on a closing basis, we should see the market move towards a level of 18,600. But I think the key takeaway is the fact that even at these levels, there are no real overbought signs. There are no topping out signs. The market looks firm. There is phenomenal relative strength. Participation is great. Momentum on the good days is far better than the bad days. So just about everything suggests that this is a textbook style bull market that will continue. However, I think as I mentioned last time as well, the index is absolutely irrelevant because the kind of strength that you're seeing in the broader markets on a daily basis, while the Nifty went through this 3-week consolidation, just tells you that it is still a very bottom-up kind of a market. So the trend is solid. I think it's a matter of time before we get past 18,000 and then the index momentum shall pick up.
Okay. Gautam, hi, good morning. The index I want to talk to you about today is not the bank Nifty, but the Nifty IT. Because, it's showing some signs of life, has tested its previous bottom and made a bit of a bounce back. Do you reckon it could come out of this bear market, or is this still a market in which rallies will be sold into?
Anuj, one thing is pretty clear that all the big winners of 2021 have taken a bit of a backseat. Banks did not really lead the market in second half of 2020 and 2021, and IT was that poster boy and just lost its sheen a little bit. But having said that, this last two sessions have been very good on the charts. I think this IT decline is a little overdone without any real materialistic change in fundamentals. We've almost seen a sort of a double bottom. I think this 28,500 area on the IT index was extremely critical, and I'm encouraged with the way the rebound has taken place in the last 2 days. So I think a reversal can happen. But if you have to play this story from a 6 to 12-month perspective, it makes sense to buy here because the downside is limited and the upside potential is about 15 to 20%. But if you're looking at outperformance, if you're looking at relative strength and momentum, I think some of the other sectors like capital goods, auto, real estate, public sector enterprise offer far greater value. So I think just need to be very picky there.
Gautam, hi, good morning. Just want to take that point forward. So you're saying autos offer real value, but don't you think one has perhaps missed the bus? I mean, look at the way the stocks have moved, right? M&M is up 60% this year. Eicher is up 35%. Maruti is up 20%. Do you see more upsides here?
I think so. I think don't look at stocks on a standalone basis with what they have done in the last 4 to 6 months. Look at what they have done in the last 3 or 4 years. I think the auto index was an underperformer. It found it very difficult to get past some serious resistance levels. A stock like M&M was in a range, for so many years. So once a breakout or a snap out happens, it usually, leads to a gear 5 kind of an activity. So I think there is a lot more upside for stocks like M&M and Maruti, which we continue to like. And even Tata Motors at some point of time should join the party. So yes, it continues to exhibit relative strength. We like it. And I think it's better to stay overweight in them.
Better to stay overweight. Now, which are looking the relative underperformers to your mind, Gautam? I mean, the stark underperformers.
There is just one, Prashant, and that's pharma. I think it's done absolutely nothing. It's been sideways all along. There have been attempts to rebound, failed every single time. Apart from a Sun Pharma or a Cipla or Loris, nothing has done well in pharma. And honestly, you don't fight it. This is the market where you buy strength. And if you do that, you'll do well. I mean, look at what real estate has done in the last 1.5 months. And I think there is 20% upside on the index, even from current levels. So I think I really want to stick to some of the top performers, even at these levels.
Stick to some of the top performers. Some stocks are bouncing back after going through the recent correction. Trent stands out in that. Trent is now at the high point of the morning. GNFC is the other one which is making a bit of a move. And PI Industries, L&T, Infotech, a lot of these stocks moving up. Chemicals, Gautam, any names that stand out for you? Specialty chemicals that you want to back even at current levels?
See, specialty chemicals went through a very ugly kind of a correction for about 8 to 9 months. There were so many stocks that lost anywhere between 20 to 50%. And thereafter, this rebound in the last 1 month has made them once again quite healthy on the charts. I don't have any names immediately, but I think this theme is here to stay. However, I don't think this is such a structural theme anymore because they will keep finding supply at high levels. Obviously, people talk about valuations and the momentum is also not the best. So some of the names that you alluded to, and Alkali Amines, the PI Industries, Vinati Organics, I think they all have good setups. They'll do well. But once again, my focus is in some of the other names. In fact, I want to believe that what chemicals has done in the last 1.5 years, the PSU stocks can do. And I think stocks like Coal India and the likes, I see some very good charts there developing for the medium to long term.
Okay, what about financials? I mean, that's a space that has done its bit, right, in the last 6 to 8 months. ICICI Bank, for example, is at a fresh high repeatedly. Do you see financials lead the rally in the next leg?
Well, it's already leading the rally, Sonia. Had it not been for the financials, our market would not have outperformed the world and we would not have been at the doors of 18,000. I think that's pretty clear. Bank Nifty has witnessed a vertical move up. This is likely to continue. Even at these levels, there are no signs of topping out because while ICICI and SBI has already done well, there are some other stocks which are now joining the Bank Nifty party. And our working view is that the Bank Nifty moves all the way to 41,800, which was the lifetime high, before any meaningful correction is seen. So I think the loss of leadership from IT and Reliance, I think banks have pretty much made for it. And this is a great place to be in because in the last decade, whenever banks have done well, India has looked completely different.
Gautam, any names from the broader market which one can look at from a positional point of view, which are looking particularly strong, good for more?
No names as such, Prashant, but I think if you look at themes, I think auto ancillary has been on top of our list for a very long time. And off late, we've noticed in the last 10 days, a lot of cement stocks are doing well. This could be large cap cement and mid cap cement. I think this could be a bigger theme that could be in play in the next 6 months. And it's obviously an indirect proxy to real estate as well. So these are the two pockets where I'm very convinced about. And not to forget the unlocked trade, which has been my favorite all along, the Indian hotels, of the world, Ease My Trips of the world, and the entire QSR space. So this entire basket and the three themes which I mentioned, I think should do very well over the medium term.
What about real estate? That's also part of some kind of that, anti-lockdown trade, and that's done well as well. But any names here that stand out, Gautam?
Sorry, I didn't get the sector, Anuj.
Real estate.
Oh, yes. I think, real estate witnessed a breakout from a 10-year range last year. I think a lot of technicians in India had highlighted that. Thereafter, we witnessed a fall and it's come back very well. Look at what DLF and Oberoi Realty have done in the recent past. And I think this is a trend which is here to stay because our working target for the NSE Real Estate Index is about 530. So that's good 20-25%. I think this is a very big theme and the stocks will eventually turn vertical, the kind of moves that they're going to see. So we have been recommending subscribers to just stay invested. Do not play for the short term because I think there is a bigger theme and use all dips to top up.
Okay, stay invested. For the market on the whole, Gautam, how do you feel about what part of the rally we are in right now? What would the texture of this market look like, say, over the next 6 to 12 months? Immediately, of course, we have a big event upon us. There's the global markets that are in a recession. But as all of that plays out, how do you see the Nifty move?
Well, it's a very unique spot that we are in. I think it's after many, many years that you have a scenario wherein global markets can correct 7-8% and India just stands there, just sideways. That's what has happened in the last 2 weeks. And I think if you look at the strength in mid caps and small caps, I think even the mid cap index is, 2% away from lifetime highs. Small cap, I think, is going to be the a flavor of the next 6 months. I think I have some wonderful technical triggers on the charts. My working target of the small cap index is about 11,000. And if the Nifty actually just manages to stay in a range, I don't see any fireworks in the Nifty, because I think people will start saying whether valuations are justified. Can we actually sustain above 18,600? I think we will, but I think the bigger opportunity is the broader markets. So I think with global markets coming back, S&P 500 rebounding from the support of 3,900, NYMEX crude breaking 85, USD INR pretty much stabilizing around current levels. I think there are too many tailwinds for India, and therefore broader markets is the place to be in. So be stock specific. I think that's the key takeaway.
Of smaller segments, which I don't know, you looked at hotels, for example, right? There are some 1920 names in that space, huge relative outperformance from the time that the market topped out. There is paper and paper companies, paper products, etc. Again, lots of listed names. Now, these are smaller parts of the market, really, so not very large. There is sort of power generation, distribution companies. Again, defense, of course. I mean, huge outperformance in the 4 or 5 names there. Do you like anything here?
Everything actually, Prashant. I think you just listed out all those names that we like. So paper, I think, has been a big story. Defense, BEL, HAL, and some of the other names, phenomenal moves there. And, many of these sectors were not the big winners of 2020, 2021. That's the key takeaway. There are new leaders emerging every single day, every single week. And therefore, please remove from your memories, the winners of 2020. And that's how you'll be able to play possibly the next bull trend over the next 1 year. And I think all those themes that you mentioned, we like, and I think they're likely to do very well.